Hi, it's Wednesday the 24th, and I'm reviewing a few trades that I took today, this afternoon, on the Euro stocks. So we're in a temporary area of value, and I am playing in the current range. It was a nice pullback on the long side. And then I noticed that it's making lower highs continuously, and the delta is somewhat neutral. So I decided to play it on the short, anticipating a breakout to the low. It's fairly common for the Euro stocks to develop these areas where it just bounces several times onto a particular line, it converges onto that, and then eventually it breaks that line. So I was counting on that, playing breakout, just a few ticks. Here, however, it reverts to the area of temporary value, and subsequent to that, it breaks out to the upside, which is something that I absolutely was not expecting. So I get out, and after seeing that much momentum, I do something foolish and I want to go long. Going long is the right thing because it's been making lower highs and now it's making higher highs, so we're looking at a probable reversal. The best place to go long would have been right there on that step, and that's because price would have retraced, filling that vacuum, the temporary vacuum that was left by all that buying, and would have then bounced onto the upper part of the previous area of temporary value. So my first entry at 94 was pretty poor. I decided to enter again at 91 and play the subsequent range. I wasn't expecting directly a reversal with a new trend. Rather, I was expecting another range, perhaps a little higher, as price movement wasn't terribly exciting for quite a long time. I wasn't expecting it to become exciting and become trending all of a sudden. So here I get a fill at 91. It has gone down on very little volume, and the book on the bid confirms the idea that the pullback should be over because we're suddenly refreshing bids onto 91. See that increasing at 91. There were double digits and now triple digits, and 92 has been taken over. So slowly we're gonna start taking up. I put a target at 94 because I wasn't sure how that was going to play out. There was a significant area of bounds, let's call it, at 97, where a few contracts were bought and sold and the price turned lower. So although the cumulative delta doesn't indicate that there is much selling, because I've been burned before, I was extremely cautious. So put my target at 94 just for a scalp of 3 ticks, and letting the remainder play out and see whether it's gonna move towards the higher side. And there are 2 potential targets. One at 600, just because it's a round nice number that everyone likes, and it's got a bit of a step on it as well. And there's gonna be another one at 605. But I definitely wasn't looking for price to get there in a hurry. So there I get filled, and I let it run for a little longer. and it takes about 5 minutes, but eventually it'll get there. Also, I'm more confident than I was before because I noticed that cumulative delta started to shift higher and higher. So this supports the idea of urgency in buying. There we are. I was worried about the previous level, and it turns out that eventually this does pull back a little bit. But look at all the green onto the summary tape, reconstructed tape, beg your pardon. That was a nice push higher. Then I have no idea what gets into me, because I decided suddenly to get short. I think seeing that big level at 600, that psychological level, I thought, well, okay, this is gonna pull down all the way to 86 and maybe retest that the little area, since we've spent a lot of effort on that, and it seems a pity that all those countries would have been wasted and gone nowhere. But it was a big mistake. I get out just in time and we won't take profit before the whole thing skyrockets back up to the high that we've just made at 600. So obviously that 600 wasn't the end of it. It was just one of the levels that came into play. And the other one that I was talking before, 605, has just been hit now. This time it looks like there has been quite a lot of absorption at 04. 1,800 contracts absorbed it, and another 1,000 sold. The cumulative delta doesn't look like it's anywhere near turning, but all the same I decided to go short because I never learn. And I mean, look at the well, if you look at the reconstructed tape, it tells you there's a lot of green, but there's also a lot of getting stuck at 04. So it goes 04 and then 05, then bit 04 again. But I realize that I've made a mistake and I get out. This time I decided I want to go long, flip-flopping like a maniac. So that 04 level gets broken. There's a lot of absorption, and that doesn't stop the price from going further. And then I stopped that level there at 10, which I remember from before being another level that was tested and prompted a reversal earlier. I also see 1,600 contracts there, and my intuition tells me that they look a little lonely there. So it's usually the case that when you have a level that is disproportionately packed with contract, disproportionately stacked with contract, it gets tested. People throw contracts at it just to see if it moves, if it gets out of the way, or if it gets replenished, if people are actually still there. And it's part of the market auction to go find those pockets of liquidity where business can be conducted. If there's no liquidity, there's no business, and that's why price is attracted to those poles that look beefy. Then it got pretty boring, so I cut out part of it and sped up the rest of it. And there we go. So cut to the chase. I think is the pullback at 0910 was deeper than I had expected, and I got freaked out. Even though in hindsight you can see that the cumulative delta in that area is very very neutral, and I shouldn't have been worried about that pullback. If I had I looked closely, had I looked more closely at it, I would have probably realized that the number of contracts traded on the way down was much lower than the usual. So when it takes out the high, I'm just looking for places to go long. And it takes out that 1,000 contracts there at 10 again, and I took it for a symptom of strength. So I want to ride that momentum. It pulls back a little bit, then it absorbs 1,000 contracts there. There's 1,000 contracts that flashed there on the bid, and I thought, well, this is as good a place as any to ride a little bit of that momentum. And it does in fact tick higher. You see that the contracts on the bid just keep on flowing in, and it takes me to a nice and safe place very early on. Just look at the number of contracts on the bid as opposed to those on the inside offer. So now at 15, we start trading 700 contracts selling. But all the way thus far, we've traded 5, 3, 200, 700 contracts on the way up with very, very little resistance on the part of the sellers. Now we start seeing some absorption there at 15. So I decided to move my target below that 1,000 contracts right there, hoping that the level will get tested. Maybe price won't barge through 3,618, but it will touch it and just take me out of my longs. So 2,000 sold at 15, 800 sold at 16. This looks like some serious absorption. We start seeing some offer on 14 as well. That's worrying. The bid refreshes, the offer refreshes at 15, and I decide to get out because this is a scalp. I'm not in to get the whole swing. Then stupidly I decided to go short. It's very early at this point. I just see a bit of brute force on the offer, and then I look at the cumulative delta and it's going lower. It's testing again that 11 level that we've broken, yes, but without much conviction. We put a high, we put a lower high, and by virtue of that cumulative delta going down, I thought, well, this is gonna break and we're gonna go back lower. But after that trend higher, that was very, very premature. I also do something else that is really stupid, and I double down on a loss because I noticed that this is starting to range. So I decide, okay, well, there's a little level there at 15. Let me go short there, and we'll get out at 10 or 11 or whatever. Well, I sacrifice a tick for the two contracts, and I get out in a safe way. So although that was a mistake because I was too excited and I wanted to get into that short, because oh my god, look at how much ground we've got to cover on the low. There's a lot of money to be made. Although that was an exciting and stupid move, at least I got out of it in a rather well organized, well orchestrated way. And then of course it ends up going lower just as I expected, but not before having put a few ticks higher that would have totally spooked me out. So again, pat on my back for having gone out at the right moment. So now I'm waiting for a retest of that level that I had just broken, 13. After a move lower with cumulative delta confirming it, I just want a price vacuum. So a vacuum of liquidity that will suck up the price. But I realized that the shorts are pretty powerful so far, and that might not happen. Instead, I go short at 06, which is a place where the longs are hitting their head and the offer is refreshing. So you see 230 contracts, 370 traded with another 100 left there. And it goes lower, it refreshes, it goes higher, they pull, they buy some more, but the price doesn't tick higher. And that's because the bid at 06 refreshes quickly enough for the price not to tick higher. And that's a good thing, because we started going lower, and that's a confirmation of the fact that the shorts are holding. So I move my stop above that 1000 contract at 07, and it's not such a great idea because with the kind of volatility that we've seen, I'm going to be taken out. So we bounced a little bit at 04. I'm ready on the trigger, on the flat trigger, fully expecting that 1000 contracts at 07 to pull, because they're too solitary, they're too lonely. Look at them, poor thing. Also, there's a lot of buy-in, so I can't get out at any time. It was a well-executed trade. The level was chosen wisely. Sometimes things don't go exactly the way you plan them, but all in all, I'm not too disappointed with how things went. Maybe the stop was a little too tight. 2-tick stop is really, really, really tight. Also considering that we could very easily pop up to revisit the low of the range that we put in earlier at, what was it, 12.13. Create a bigger liquidity vacuum, spike up, and of course no one else there to buy because they're all being burned before, and the price would go lower. And that 600 contract at 07 really worries me, and it takes me out. There you go. There's 1,000 contracts that appear there out of the blue, but I know that this is all just a play. The idea for a short is still valid. I get taken out because look at how they're playing. They've pulled a lot of contracts from the book, thus making the book a little lighter and a little more susceptible to volatility, because the less the contracts that you have, the less contracts you need in order to create big moves up and down. And this is what sometimes is referred to as the chop. So I get taken out, but then I want to get back in because the book on the offer gets stacked back up again, and the premise of the trade is still valid. The cumulative delta is still going lower. Although we've been stuck a little bit at 04 and we bounced, price is still making lower highs and lower lows. So I decided to leave it there, give it just a little more breathing room, seeing how easily we've been taken out. And we've tested the higher. There's nowhere else for price to go but to put in a nice move to the lower part of the chart. And we've tested those 05 and 00 extensively. So I expect things to go a little slower. So I'm just gonna speed this up and we'll see how action develops. It's gonna take a few minutes. So here's the moment of truth. Price has knocked his head a couple of times on 10 with nobody ready to buy at 10 anymore. There's a low volume node there at 10 as well, which divided the previous area of temporary value with this one. So I reset the temporary volume profile, the split volume profile, because I want to see what the pullback is going to be like, because I know that it's going to test the high of the temporary area of value again. So maybe, I don't know, 08, 09, and I want to see on how many contracts it goes up. Cumulative delta is a little bit all over the place, although in the long run it looks like it's going down, but it's been ranging a little bit. We see now price going up back to 07 on 100 contracts, 125. No sellers. Sellers pull out of the way. They just let them have it. And I always thought that if sellers are really pulling out of the way, then they don't want to sell, which means that buyers are in control, but it's not like that. They're just pulling out to be able to sell at a better price. There you go, 130 contracts, we tick up to 08. Look at the book on the offer, still pulling, 300 contracts, 250. The minus 300 there is indicative that they're just heading for the door, just letting buyers think that they can take up price as high as they like. But if you listen very carefully, now you hear silence, there's no buyers anymore, and then boom, it collapses back to double O's. And that was with a quick scalp if you had a target there ready. Anyway, these were two things out of Jigsaw. One was the play of an area of temporary value, and the other ones we've seen a couple of scalps waiting for a liquidity void. These are two of the main thing that I'm doing now with Jigsaw. I hope that this helped someone. It definitely helps me to review my trades. Thanks for watching, and we'll see you next time.